Okay, folks, welcome to Thursday Night Stock Charts Live and another Thursday. Here we are again. What a week. What a week. What we're going to talk about tonight are, as we do every Thursday evening, we're going to go over the weekly charts. The one comment I like to make is this, and that is one trading day left to go. A lot can happen. We saw a big change in bond yields from where they were last Thursday evening, from where they closed out the week. A major move higher. Those yields have only gone up. Big problem for the market. Beta. That's your high beta names, even high quality names. I'm going to show you a chart, FFTY. That's the Investors Business Daily IBD 50 Fund ETF. Great ETF. But those big beta names, healthy names, high tier, top quality earners, high growth rates, they're getting annihilated. Great opportunities coming, but not yet. We're going to also talk about, I'll probably say this a couple of times tonight, just for the benefit of those that this is your first correction or first real serious pullback. Today's lows may be tomorrow's highs. Think about it. Today's lows may be tomorrow's highs. What does that mean? Well, you may have had a rough day. It closed down weak. The market closed down weak. Your favorite stock closed down weak. You can't go down any lower. Then all of a sudden you wake up the next morning because you decided, I'm not going to take a loss here. It can't go down any further. All of a sudden it gaps down. Today's lows may be tomorrow's highs. Be careful. Write it down. McCarter, 10% correction. Could be very easily. I mean, if you take a look at the, let's go to it right now. I brought it up. Let's talk about it. And I'm going to talk about why I am, pardon me as I sip my hot cocoa. Decaf hot cocoa. Boring, but it's getting late. FFTY, Innovator IBD, Investor Business Daily 50 Fund. This is a weekly chart. The stocks that make up this fund are top tier growth stocks. Either they have huge growth and or huge EPS, earnings per share, and it's accelerating earnings per share. This fund is down, and one trading day left to go, down over 8.25% on the week alone, down over 10% from its highs. So beware. Even the best of breed can get taken to the woodshed and popped. So beware high beta. Before we get into the charts, I want to talk to you about our sponsors. First, if I may be so bold, over at TrendSpider, we will be using their charting software. Automate your grunt work, speed up your technical analysis, and don't settle for ordinary trading software. If your new trading software, current trading software, does not have automated technical analysis, automated trend lines, back testing, and scanning, then you're wasting your time. You need to have seasonality. You need to know, when does your stock do well over the course of history? If you don't have these tools at your fingertips, you're not on par with your competition. TrendSpider, 35% discount code below. Let's get to the charts. First, let me say hello to people. I know McCarter was on. Big Bear. It's going to be a whiskey weekend. No doubt, pal. No doubt. All right. So I want to talk to you about why we are short of this market. I've been coming on here for, especially these past several weeks, talking about the valuations of the market, how expensive we were, whether we're using the Shiller PE ratio model, whether we're using the Buffett model. I've talked about yields ad nauseum. We're going to go to that in a moment. I've warned about the yield curve. I've warned about the threat of rising yields. The chickens are now coming home to roost. They had a 7-year Treasury auction today. Horrible it went. They had to pay up on those yields. That's why you saw a collapse in bonds today. So I think we're going to get a rally on the longer dated maturity bonds, but I'm not going to stick around long. So the chickens are coming home to roost. We're going to go to those charts in a moment. First, I want to talk to you about why we are short. Why are we short of the IWM? Let's get away from valuations, right? Let's just talk technicals. We know they're expensive, ridiculously expensive. What you're looking at here is a new chart that I actually stole from somebody, but I liked it, so I politely borrowed it. And rather than using a 20-period moving average as our baseline, I opted for the 48-period moving average. Why 48? I have no idea. It just seems to flow nicely. So we are so far beyond the 48-period moving average, I can't tell you. These are Bollinger Bands like I normally use, but they are shaded in an area to kind of really illustrate how extended we are relative to where we've traded on a monthly chart over a 48-month rolling time frame. You got to look at this chart. All I do is say this. You know, people want a technical jargon of why are you short? I look at this chart, I point to it, and I just say, look back in time. We're not supposed to be here. And I had two people come up to me over the past couple of days and say, Powell's going to be, he's testifying, he's saying liquidity forever. Stocks go ripping up higher. Are you going to cover? That's the question they asked me. Are you going to cover? I said, why am I going to cover? Bonds are declining. Yields are going higher. They don't care what Powell had to say. Pay attention to the bond market and not what Powell has to say. The bond market will dictate which way stocks go, not Jay Powell. So pay attention to the bond market. I can repeat that 30 times. It won't be enough. Watch the bond market. So now stock traders they're waking up. And you're beginning to see, this is like a Wile E. Coyote moment. People have been momentum trading this stock market. They didn't care about valuations. They didn't care about the technicals. All they care about was Wall Street bets this, stocks go up forever, YOLO, and all this nonsense. Folks, this is not going to end well. People are waking up, looking at a chart right now, and I hope that you're getting this moment. This is not going to end well. That is just the small caps. You know, we're short of the Qs. The Qs are not as technically overbought as the small caps, but they're performing worse. We're going to go to a daily chart in a moment to show you how the Qs are just an utter basket case along with technology. Why is technology and the Qs under such pressure? Bond yields. Bond yields. They don't like bond yields. Yields going up is good for banks, transports, things like that, energy, because there's a perception of a growing economy. But yields go up and technology margins get squeezed. They don't like that. So they go down. So let's say hello to people. Hey, Dan. Hello, all. Gold miners. Yeah, they're not going to behave well right now. They're going to go down with the rest of the market. Then all of a sudden, they're going to catch a bid and they'll pull up first. Watch gold. Gold should catch a bid first, then the miners, then your blue chips. Mr. G, hello. How are you, sir? JW? Larry, 22 days until the 1st of spring. Your words to God's ears. Paul, hey, brother. Will, hello to you. Great to have you. All right, cool. So the Qs, monthly time frame, extended bearish reversal bar on the month. One trading day left to go. That's it. CRM came out after hours this evening. Salesforce.com, annihilated. 15-minute chart, Salesforce. The street did not like their earnings. I haven't done a deep dive yet, but whacked. What else do we want to take a look at? Let's take a look at semis. Remember the headlines the other day about how there was a semi shortage and the shorts got squeezed big. And it was probably the last gasp for the semiconductor sector. RSI monthly time frame, nearly 85, trading up and above the third standard deviation Bollinger Band. I mean, the up volume, we haven't had, I'm not even going to say an above average month in terms of volume. We haven't had an average month worth of volume since almost a year. Almost a year. Look at this down volume drop, up volume dropping off. Crazy. Yeah, Nvidia, I heard they got wiped out today. Let's bring up that chart. Yeah. Yeah, Nvidia down almost 11% on the week. It looks like the bubble done been pricked. So here's the big problem for Nvidia is this. And whenever you see this, it's a problem, as a matter of fact. All right, so we broke out here, rallied, pulled back, retested, nice bounce, good stuff. Maybe we'll rally back, maybe we won't. We didn't. Breakout point failure or a bull trap, whatever you want to call it. I think that Nvidia, at a bare minimum, is retesting, what is this, 520? 520? It's probably going to break it. So avoid. I mean, if you do a print screen of this chart. This is the semiconductor sector. Now this has got to revert to its moving average at some time, and that means it's got to drop down a whole lot. I mean, granted, this is a rising moving average, but it's moving very, very slowly. That's nearly a 50% drop from where we're at right now. I'm not saying it's dropping 50%. Let's get to the the weekly charts. All right. So has this been updated? Yes, it has been updated. So this is as of the close of today. Now, we need to start looking at how much further this yield curve can continue to steepen before we get a major correction in the market. I think we're there. I think we're very, very close. We've been warning for weeks. You can go back, look on YouTube, Thursday Night Stock Charts Live, going back, I don't know, 2 or 3 months already. Every week I've been warning, showing this chart, beware, beware, beware. And it looks as though we're reaching that tipping point. Bond market, TLT, hit hard. I mean, wow. Weekly chart, TLT down nearly 3.33%. That's a major, major move on massive volume. And when you take a look, we'll come back to the 10-year yield in a moment. When you take a look, and this is what I've always warned about, is that when the United States is in trouble, when you see the bond market and the dollar moving lower in tandem. That means that borrowing costs are increasing and the US dollar's purchasing power is declining. So imports become more expensive. That is inflation. The Federal Reserve doesn't want to admit there's inflation. I show the charts all the time. Wheat, corn, ag, lumber. There's inflation. It's out there. So they like to cherry pick. We know it's there. So beware. U.S. dollar down, bonds dropping, not good. It's a horrible mixture. Tips. Treasury inflation protected securities getting annihilated. These are going to be a buy pretty soon. But it looks as though we're going to head lower first. Perhaps as low as 121.80. Seen last March. crazy. But we'll be looking at the tips to hedge against inflation. Now, going back to that 10-year yield. Updated good. Folks, the street has been talking about 1.5. It was even brought up earlier today on a morning live stream about how 1.5 on the 10-year Treasury, I think it was Guy Adami who was quoted, was like the line in the sand. And I have already heard that. And it's been several days ago. It was made through a major brokerage house that's the whisper number. That's the number that the street is looking at as if, you know what, this may be the tipping point for stocks if yields rally up to 1.5. Frankly, I thought we were going to begin to buckle and right here as we hit this resistance level at around 1.14. I thought this was going to be Armageddon. Last week, it wasn't. This week, now people are paying attention, especially with the dollar dropping. And what happened in Texas is just a catastrophe. Big Bear knows better than anybody else. He's down in San Antonio. So we closed out the day today with a yield on the 10-year Treasury at 1.54%. Historically, very, very low. Very, very low. But we have so much debt. Even when you compare prior to COVID, our debt is so much higher. The last time we hit 2% on the 10-year yield, the stock market began to roll over. Powell was cutting rate. He knew the stock market was going to go. Now we have what? Additional 9, 10, a couple of trillion more coming on top of debt. At what point in time does the market say, we can't take this? They couldn't take 2% at 20 trillion. How are you going to take 1.5% at 30 trillion and rising? So, scary. It's very, very scary. But these are the things, if we're aware of it, we're able to trade it. You know, if you appreciate the history of these charts, I know they're boring. That's why I have a business. People think it's boring and they hire me. Hey, can you watch this for me? Do a couple of videos a week? Okay, I can do that. They outsource this. I've been pointing this out. Watch the yield curve. This historically does not end well. What did we do? We went short. We went short the market. It's not a brag. I'm telling you what we were doing. I've been saying it. Did we get short a little bit early? Yep. Did we go all in too early? No. We waited, and we're still waiting to add more because we haven't broken yet. Let's go to the equity sector. Before we go to equities, let's go to VIX. Now, just to show you how rapidly this market moves, this chart last night was negative and at around 2150. We closed out the day at 2889. The high was 3116. We're probably going higher. Especially with news out of Salesforce. Khalifa, hey my friend, good to have you, man. So we're looking for a breakout here on the VIX. Unfortunately, if the VIX does break out, that means your S&P 500 is getting hit hard. So again, I'm going to repeat this for the benefit of people just joining in. In a market environment like this, where we're starting to put in lower highs and lower lows, that shows your trend is changing from bull market to stalling to bear market or correction. You know, it's too premature. Let me retract that. I don't want to be hyperbolic. Let me just say it's a sign of a correction. We're nowhere near a bear market yet, okay? I'm going to retract that. So the VIX setting up for a rally here, not good. Now, what was leading the market, or has been leading the market, and frankly still is leading the market, are the transports, the railroads. In particular, airlines were catching the bid. They got hit today. The transports are still up on the week for that matter. But the problem is here is that they are fading. They're fading. You have a big topping tail, wick, shadow, whatever your book calls it, technical analysis for dummies, call it a cupcake with sprinkles. It doesn't matter. What you're looking at here is the market sending you a signal that there are sellers above. Institutions want out. They know what's going on. So, look out. Transports, I don't think they're going to hold up. And take note. Watch for your divergences. Let's move this up. Let's take our crayon out and get curious. So I drew this line a couple of weeks ago on RSI. Take a look at this. These are your momentum indicators. RSI, Ultimate Oscillator. I defer more to the RSI. They're putting in lower highs and lower lows, and the transport's at an all-time high this week. So the market's sending us signals, folks. We could choose to ignore it, listen to the mainstream media, or you can come here, listen to alternative news media. The Dow Jones Industrial Average, bearish reversal bar. And we're down on what's probably going to be not horrible volume. It's probably going to come in about average. The S&P 500. So we haven't broken trend yet, but we are very, very close. Volume is probably going to roll in above average slightly, not horrible. This MACD has been ominous for a while now. It looks as though it's finally going to go negative, probably next week. Daily chart. Now, here's where things get interesting. And this is where you got to be so careful in a market like this. Note this uptrend line, this upper band of resistance on RSI. And I've been pointing out that while we're putting in all-time highs, same things with the transports, except this is a daily time frame, that RSI has been putting in lower highs, too much caffeine, yet we hit all-time highs, and now we're beginning to break down. RSI is validating. We broke down on the 23rd, flashed a reversal bar, recaptured support yesterday, fell today, very weak price action. So what you want to do now is this. Take your crayon out again. Acknowledge what's going on. I know it sucks if you're down on a position. Maybe you got to tighten up your stops. We all do it. It's part of the business. Take your crayon out. There's your lower high. The question now is, do we break down to new lower lows? I think that it's quite possible that we do. And that will be a confirmation breakdown. First correction, then after, who knows? I'm trying not to be hyperbolic. Small caps, we've already gone over this chart, actually the monthly chart. We're down nearly 3% on the week. On the day, most of those losses came today. We remain in an uptrend. All right, the uptrend channel is still intact. But as we just did with the S&P 500, got to take our crayon out. Acknowledge that we have a probable lower high. And now, do we take out this low at 215.56? If we close down below that mark, that's a confirmation breakdown. And remember, the algos out there, all these computers, that's what they're looking for. And take note of the bearish divergence on RSI. As we put in new all-time highs, the market was sending us a signal here. It was no great shock that this was coming. Look at the volume today. Incredible, incredible volume. The Tues. Now, here's where things get bad. Remember after the initial sell-off during COVID, it was the Tues that led the charge out. And for the most part, they held the market up for quite some time. Then eventually cyclicals joined in and partied as well. That's all over now. The Tues are now vastly underperforming the rest of the market. So what were leaders are now laggards. They've broken weekly support on massive volume. This is not mom and pop selling 100 shares of the Trip Tues. That's Goldman Sachs, the big brokerage houses. Note how we're making all-time highs, and only once over the past couple of months did we close above 70 on RSI. Another tell, lower highs, hitting all-time highs on the index daily chart. Look at this. Broken trend. I warned about this on Market Wrap on the 23rd. I said, beware. We broke support on the 22nd. Continuation breakdown, yet a bit of a reversal off the lows. What I suspect is going to happen is that they're going to rally it back. It's like when a stock breaks out, then pulls back and retests. What was resistance should now act as support. Flip it over. Now, what was support is now going to act as resistance. What happened? We did exactly that. Now, reversal ball. We haven't taken out the prior lows, but we're right there. The banks. So, the banks do well in a rising interest rate environment, but there's always a but. The but is the rest of the stock market needs to be moving higher as well. You're not going to have the banks just outperform every other sector. It's not going to happen. So if the rest of the market goes, so go the banks. And yields are technically becoming a bit overbought. Expect a pullback at some point in time. The Fed is probably going to have to intervene here at some point in time. It's going to be difficult for them to manage the longer dated maturities, the 20-year, 30-year bonds. Easier the shorter dated maturities. So big topping tail here on the banks. On a daily time frame, here's where it gets very, very troubling. Outside reversal bar or a bearish engulfing, not good, no bueno. And we were down on volume. So what was a safe haven sector? You're now seeing institutional distribution. I already went over TLT earlier. If you want to catch it on the replay, Carlson. And for disclosure, we actually went long of the TLT using call options. So they're oversold. I think they're going to bounce soon. I don't plan on staying long. They had a fairly good close relative to the equity sector. So they closed off their lows more so than most equities did. So I think that we're going to get a bounce fairly soon. Equities are not oversold. Bonds most certainly are. In fact, if you take a look, here, let's do it. If you take a look at a daily chart of the 20-year bond, and you go back, let's go back, I think it was 2 years. Or 5 years, 5 years. Now, today we closed out the day with RSI at 17.98. We haven't been this oversold on RSI since November of 2016. So there can be more downside here, but expect a quick rally back. I don't think that rally is going to be sustainable. It's probably going to roll over. So we're in it for a trade. We're not betting that bonds are going back to the moon. I think that trade is dead. So beware longer term of U.S. Treasuries. Consumer discretionary. Consumer discretionary names are getting obliterated We are down over 5.33%. This is a weekly chart. We have, what is this, the S&P 500 overlay? Let's get rid of that. You know what? Let's keep it. S&P 500 overlaid in blue. You can see how dramatically consumer discretionaries are underperforming. And even on a day where the jobs data wasn't as bad as expected. I don't remember the exact number. But if you take a look at Starbucks, the Pimp Mac Daddy of everything that is discretionary, it's still positive on the week, but just barely. So, actually, not a bad chart. But I think this is going to play catch up to the downside. So beware of consumer discretionaries. Bitcoin down over $9,000 on the week. Now, I don't believe that it's a bubble, but it's definitely overbought. And we've talked about this because the monthly chart, this is what I look at for extreme oversold or overbought stocks, RSIs, extreme overbought, extreme oversold. You show me a 90 handle. This was above 90 a few days ago on RSI. Now it's down below that, but still 89.63. It's crazy overbought. So there's more downside here on Bitcoin. Not that I'm necessarily going to be buying it. I like to talk about it because people like to talk about it. Because frankly, I don't know what it is. I don't get it. I don't understand what supports it. So I don't buy what I don't understand. I've owned it before, but I saw it's a technical trade and I took advantage of it. So then I was in, out over the course of like 2 weeks. So there are smarter people out there than I am that know more about this, that are able to sleep at night. Me, I don't know what underlies this. Gold, I know. It's a big fat rock, 5,000 years old. People view it as money. We're good. So I'm a gold guy, old school. So beware, Bitcoin, more downside potential here. Don't catch this knife. I can't give financial advice. These are my own opinions and for entertainment value only. Weekly chart. So we're still overbought here. Outside reversal bar. Daily chart. What are we doing now? Bearish reversal bar. I think if we break 44,000, you're going to see a precipitous drop here. Perhaps into the 30s like that. So beware. Especially if this market gets going in the wrong direction, as it appears it's beginning to. We have record high margin debt. So when those margin calls come, you can have a great stock with fantastic earnings. People have a tendency to sell what they have a profit in and hold what they have a loss in because they don't want to say they were wrong. It's human nature. You got to fight that. It kills you, but you got to do it. McCarter, you the man, Bob. Thank you very much. Bob, have you read Peter Schiff's book? Just wondering what might be a good read to understand the difference between correction and collapse. I think correction is just the way I view a correction is that it's just a normal, healthy pullback in a market. You want to see that stair step higher. You get your pullback and a nice rise higher to higher highs, higher lows. What we're doing now is, and it looks as though we're kind of like hitting the end of the line in terms of monetary manipulation. You know, we were once a manufacturing nation. But even as far back as the 1980s, I remember about hearing us turning into a services economy. And it was back in the 80s. It wasn't something that came about in the 90s or the 2000s. But this financial manipulation and this debt spending, all they're doing is like a hamster on a wheel. They don't know when to stop. They can't stop. I mean, if they stop, this all gets real fast. You're talking about third worldism here. So what Peter Schiff is talking about is a major reset in the global order. And it happens usually once every 75 years to 100 years. We've been the prevailing currency now for well over 75 years. And we've exploited the hell out of it. I mean, we've had new cars, new TV sets, upward mobility for generations now. And unfortunately, we blew it. We blew it. And unfortunately, the bills are coming home now. So that's what Peter Schiff is talking about, is that great, you're hearing about the Great Reset. That is an ideological reset that you're hearing about. The Great Reset is going to be the monetary reset. That's reality. So I don't want to get into politics or anything like that. Nobody wants to hear that crap. So beware. Energy. Great week. Still up. Nearly 7% on the week. But note the correlation with oil. It's like, it's 95% correlated with oil. Let's take a look at oil now. Oil is on a ridiculous trajectory higher. There's a lot of oil out there, and I don't get this rally. I don't understand it. So, as goes oil, so goes energy. And if you're gonna be in energy, look at the Exxons of the world, the Chevrons of the world. Avoid the frackers. I think they're in the crosshairs of the federal government right now, so I would avoid them. Gold, very disappointing price action this week. One trading day left to go, but we are down on the week slightly, holding support. Daily chart. We're rolling over here. Note the lower highs and lower lows on RSI. We have broken down below support level today. Volume is rising sequentially. That's not good. Now the miners, I was tempted to go adding more GDXJ, which is the junior miners. I held off because of my concerns about a correction in the market and knowing that any stock is probably going to go down if we get a major correction. So I held back. We did a couple of put option trades to generate some income, but nothing major here. Once we get a washout, I'll be looking to build a larger position on the GDXJ and silver and the silver miners, which did horrible today. Great yesterday, horrible today. They gave it all back. So these are all volatility signs that gains aren't being held. Therefore, too many weak hands. We're going to have to get a pullback. Those weak hands are going to have to get shaken out. Strong hands take over those shares, and then we move back up. I have a comment here. First time seeing your channel. Would you analyze TOO? I've been trying to apply RSI and MACD to this learn. Sure, what the heck? For a newcomer asking an educated question like that, how can I say no? I just wrote it down. I'll remember it. Once you make my list, I check it twice. Quickly, my gold money. Thank God we sold this. Horrible, horrible day today. We may go lower here. I want to buy back in. Somebody mentioned Peter Schiff, part owner of this. SILJ, the silver miners are still up on the week. Horrible day, though. Down nearly 6%. They held support. And we'll leave this off with silver. And then we'll talk about... I want to check out Boeing. Before I forget. Whack today. I think Boeing's seen a top. Silver. Still up on the week. Just barely. This is a leveraged ETF, so up a 0.5 percentage point. Big volume, but a lot of it's selling. Let's take a look at a daily chart. See if any support levels were broken. No. Bearish reversal bar. Silver's holding up much better than gold, I have to say. Far better. I prefer silver right now more so than gold and or the gold miners. So let's... we are always bullish on Bob. Thank you very much. It's very nice of you. Very nice. GMBL. Okay. Let's do some chart requests. NY Jets. Hey, brother. Thought we were seeing inflation yesterday? Yeah. Langley, hello. Biden rejection of nat gas, solar, etc. Still way off. Yeah, solar's way off still. Look at Texas. I mean, the wind turbines. I love all that stuff. I think it's great technology. It's just not prime time yet. All right, let's do some. I got to go to the members area first. Let me see who requested. I did this morning, so I may not have much. Manoj, NGA, Nestor, PayPal. I did Wayne yesterday. So NGA, PayPal. Okay. Let's bring up our friends over at TrendSpider. All right. Okay. Northern Genesis Acquisition Corp. Let's go to the monthly chart. I don't know this one. Not much history here. Monthly chart. What I see is horrible. There's not a lot of data here. If this is a SPAC, I don't want anything to do with a SPAC. Not in this environment. Far too speculative. And in this market, speculative high beta stocks, they just get annihilated. So I'm not loving this. I wouldn't short it. The automated trend lines is showing that we have an upper band here in red, lower band in red, green. In green. We bounced off of it. Do we hold it? I don't know. In this market, I don't want to play a bounce off of support. I frankly, I just want to be short. I just want to be short. And I want to keep a hoard of cash. And when buying opportunities, you want to be able to go to your watch list and start picking up those bargains. So to me right now, when I see this and I see, when I see top tier names like Nvidia, God damn it. FIDI, the IBD 50 fund. These are top tier stocks. When these are going down, I'm not speculating on anything that's high beta because these are earners. These stocks have revenue growth. They have earnings per share growth. I don't know what this is. So I don't want to play a bounce on something that is unproven and I don't really know much about it. To be honest with you, to comment on their fundamentals, but the technicals are not wonderful. So I would avoid this. I wouldn't play the bounce. If you're going to do it right here at 18, 17, give or take a dime, but in that neighborhood. But if we break the lows of the week, you got to avoid it. What's the next one up? PayPal. This is definitely one that you want to throw on your watch list and take a look at it. I mean, PayPal down over 3 1/3% today. Okay, so I want to see where PayPal is on my trusty 48 period moving average chart. It's still bananas, but it's a top tier stock. So me personally, I think that we're going to get a continuation pullback here. My wish list price for this stock, I would say right around here, which coincides with the automated trend line right here. But the automated trend line is rising. So this is what I'm going to be doing. Taking my crayon out. And if we get a washout, then we'll entertain getting long of it. But right now, I mean, on the week, it's down over 10%. There's more downside to be had here. You know, if you're dead set and want to get involved earlier than where I would want to get involved, right here, 224, that's not a dream price for me. Frankly, 196 isn't either, but it's much closer than 224. So this may be defended. Will it hold? We don't know. So it all depends upon how serious this all gets. Daily chart. We had a dead cat bounce yesterday. Follow through to the downside. Today, I would avoid. I think we're going lower on PayPal. But it's an opportunity. It's one of those stocks. All right. So let's go back to the comments. Hey, Bob, Rocket just had earnings today and was wondering when the market settles and a fresh bullish. Let's take a look at it. I know it closed down on the day. Where are we now? Son of a bitch. Jesus Christ. Adjusted sales, $4.775 billion versus $1.82 billion same quarter last year. That's nuts. Crazy. This is definitely a watch list stock. I haven't had any luck with this, but definitely a watch list stock. So the question was, wondering when the market settles and a fresh bull entry setups, would it be a good seasonal mortgage play even in this market? Thanks again. Yeah. I mean, you know, I showed you that FFTY fund, and most, if not all, of those stocks have massive earnings growth, but they're getting taken to the woodshed. So right now, what you're seeing on Rocket is a lot of short covering. That's finite. And if the market sells off, eventually Rocket's the luster of the earnings report is going to come off. But this is one where, assuming that the housing market stays strong, then it's one that you want to add to your watch list. From what I understand, the migration out of urban areas and into suburban and rural areas, that migration is going to take several years to do. So Rocket Mortgage is in a perfect spot to do that. So, yeah, I think it's definitely one that could be added to the watch list. Would I chase this right here, right now? No, because I wanted to fall back to the overall market. Because while, yeah, sure, Rocket could trade up tomorrow, next day, even if the market's down. Eventually, if the market continues to lose steam and drop, this is going to roll over as well. But that is the opportunity that you'll be looking for. That's something that we'll be watching. So great point, great question. Yes. All right, how much time do we have here? 9 minutes to go. I promised to do TTOO. We'll use, so the question on TTOO had to do with MACD. Who asked that question? Whoever, there's so many comments. I love how popular this is getting. It's good when you can't find the comments. Oh, here it is. First time seeing your channel, would you analyze TTOO? Yes. I've been trying to apply RSI and MACD to this alert. Okay. MACD and RSI. So keep in mind, RSI is a forward-looking indicator. MACD is a confirmation indicator. So they both have value, but both are used for different purposes. So let's bring it up. Oh, I've seen this one before. T2 Biosystems. All right, so let's do a hypothetical. Let's say that we're not in a market that's under pressure right now. Let's say that we're still in the uptrend of last week, the week before. You'd be starting off with your monthly chart, and the first thing you want to do is take your crayon out, go to your RSI, and validate. Am I no longer putting in lower lows than lower highs? And am I now beginning to put in higher lows and higher highs? And the answer is yes. We're doing that, right? We settled out. The trend has changed. We're hooking back up. Momentum at its back. These are the Stokes. I should have been using RSI. So there's your RSI. Same deal here. And we have now broken out above resistance. So this trend, which was down, has now reversed. So what you're using is your RSI as a validation tool, or at times a tool that would indicate that you have a breakout possibly setting up, because RSI, as I mentioned earlier, is a forward-looking indicator. And there are times, there are times where you'll have, let's bring, you'll have RSI breaking out in advance of price. Now, was that the case here? No, it was not the case. So it was a one-for-one validation breakout on RSI and on price. But there are times where you'll still be in your trading range and RSI has already begun to break out. Doesn't necessarily mean you go buying in advance of the breakout, but maybe you want to scratch the itch, or at least keep a very close eye on it. And what I like to do is I like to drift down, go through the monthly chart, down to the weekly chart, down to the daily chart. I don't do much intraday because I'm not a day trader. I like to sit back at night, analyze charts, because I'm a chart nerd. So here, RSI became overbought. Technical analysis for dummies will tell you anything above 70, you go short or sell. Never listen to that rule. When a stock goes above 70 on RSI, that's a sign of a healthy stock, and it's probably going higher. But you need to start thinking about a trailing stop loss order, something that's going to get you out and near the top, because you know you're going to get a correction soon. Doesn't mean you go selling. And that's exactly what happened here. All right? I haven't spoken much about MACD because I don't use it all that much. What I do use it for is longer-term trends. And I don't use the lines. I use the histogram. Now here is MACD, obviously trending up higher. No, this is a pretty sharp reversal. Over here, you saw a steady trend. We began to flatten out, and the histogram really sent you a warning flag or a sell signal early on. But I really don't use this per se for buy or sell. It really just validates more of what I'm seeing. Case in point, S&P 500. This here is ominous. This is like a huge dark cloud on the market. You know that in all probability, this is going negative next week. That's your validation that this market is weak or a stock is weak, that you get that negative crossover and your histogram goes negative. But RSI has been telling you for several weeks now, look out below. We're putting in lower highs in RSI, but we're putting in all-time highs on the S&P 500. So that's the difference between a lagging indicator and a leading indicator. Back to TTO. I'll finish off with a daily chart. I don't know if I answered your question here. Hopefully I did. Come back. I'll clarify it more. Glad that you joined in. Good to have new viewers. Like, share, subscribe. Nobody reminded me tonight. Oh, actually, no. Denny did. I just saw that. All right. I'm going to give Denny's got to get his props. Thank you for Denny. So yeah, like, subscribe. And so usually viewers that remind me. So I thought I had one up on you this week. That didn't happen. Denny got me. Who else got me? Nobody else. Just Denny this week. All right, cool. Oh, Will did. Will did too. Cool. Thanks, guys. Got my back. Daily chart. You're very welcome. Thanks for joining in. Great question. And just wrapping up with TTO daily chart. This is a stock that's in trouble. So you can see your histogram continues to make lower lows. Right? So ideally, when a stock is bottoming out, you're getting a flattening out of this histogram. It's very difficult to judge the loss of momentum on these lines. I don't know. I never adhered to it. I never got it. I like the histogram bars because they're clear, defined, and easily measurable. So watch for a flattening out. But just because they flatten out and begin to move back up, they can always roll back over. Many times, MACD histogram tricks you, and they begin to lose momentum yet again. So beware. I would suggest you'd be better off learning the Stokes. The Stokes, to me, are a better leading indicator to use in conjunction with the RSI. So I like MACD, but it's a validation tool. JA, hello. All right, let's take some other requests here. And I'm going to log off. I'm losing my voice. Thanks, Denny. Clorox. CLX, great company. I haven't looked at this chart in a long time. Wow. Yeah, you got to avoid. I mean, here's the value of automated trend lines. Let's take them off. So we began to put in lower highs and click of a button. For those folks who's joining in TrendSpider, 35% discount code below. They're a sponsor. There's a link below. Take a tour of their site, automated trend lines. If you had them, you knew here that we were hitting resistance and that if you had a profit off of this, off of buying off of the support back here, great place to book profits. A great re-entry point would have been down here. We did rally, but ultimately it failed. So we're putting in lower highs, lower lows. This is not ready to get bought yet. I think we can head down lower. In fact, I'm eyeballing here. This volume shelf at 146.50, 164.56. I just caught a case of dyslexia. So 164.56, first support level I'd be looking for on CLX. This is a COVID play. All right, so just beware. As they allow COVID to pretend it was never here, Clorox is going to take a hit. So beware. Daily chart. Yeah, we broke down today. Again, the power of the automated trend lines. Click of a button. We broke support today. I think we're going lower. Look at a price target for the next bounce at 175 thereabouts, but it may hold. Who knows? We really need to revisit it at that point in time. I'll take one more. We did TLT. Somebody had a SPAC up here. GBOX. There's really very little data here for me to review. And this is a daily chart. So if it's a SPAC, I have to say avoid. I don't know what it is. And you had, I love this guy. Charlie Munger. If you think Warren Buffett's smart, Warren Buffett will tell you Charlie Munger is much smarter. And he calls SPACs shit. So if Charlie Munger doesn't like this, if Charlie Munger doesn't like SPACs, I can't get excited about them. I don't understand them yet. It seems like a quick way to get to IPO quickly and generate cash flow for some of these investors. So I would avoid in this market environment. We'll revisit. Not a horrible day today. It tried to break out, but no dice. Just not enough data here to really analyze. And the other one that you wanted, McCarter, was GMBL. Wow. Oh, it's esports. Interesting. So it's a high beta name. You had a beautiful, let's get these automated trend lines off. You had a beautiful Bollinger Band squeeze setup here. I can't buy this right now, but I'm interested. I don't think this is going to hold. Where I'd be interested in is a retest of the breakout point, which was right here, 944, give or take a dime. Now the play here is, you may be saying, this guy's crazy. The play here in the back of my mind is not the stock, it's the market. Right? So if the market continues down, granted, yes, it's still up on the week, but it's extended. Margin calls are coming, and people will sell their kitchen sink to cover a margin call. So, or you're going to have forced liquidation if they don't. So beware. I'm sure the margin requirements on this thing are very, very high. So it's like trading with cash. So people are going to sell this really, really quick to free up a whole bunch of cash so they can go out and buy stuff that you can buy on margin when stuff gets cheap. So beware. So I would set up a wish list, buy point way down here. I would set my alert. And I would set 33 days. Why I'm picking that number, I don't know. I'm thinking in thirds tonight. And I would forget it. That's what I would do. If you want good, safe risk reward, set your alert. It'll come to you. They usually do. Big topping tails today. I can't buy it here. I would avoid in this market environment. I'm very risk adverse to getting long of anything speculative right now. Again, going back to, sorry to keep bringing this up, FFTY, high quality blue chip growth names getting annihilated. If they're getting annihilated, this is next. So with that, folks, thanks for joining in here tonight. I had a great time. I appreciate the time that you spend very, very much. And all right, Khalif, I'll do Tesla, and we'll leave it at that. All right, TMO. Oh, God, you guys are killing me. All right, I'll do these quick. DKNG. Avoid bearish reversal bar today. Holding support. If it breaks 58.83, it's coming down to 44.37. I would avoid it. Same thing holds true for DraftKings, as I just mentioned with GMBL. And remember, consumer discretionary is getting annihilated. These are about as discretionary as you get. So I would avoid. Lightning round. Tesla. I've been bearish on Tesla. Love the company. Definitely a wish list stock. Can't buy it yet. What I got worried about with Tesla is when he started talking about buying Bitcoin. When these CEOs start buying Bitcoin, that bothers me. That's not your business. Your business should be cars, spacecraft, whatever. Do you Elon Musk, genius stuff. He was getting in trouble over in China. The minute he was getting in trouble over in China, he got the announcement out about Bitcoin. That rubbed me wrong. It was a tell. I said avoid. Now we're down, 16.5% on the month. I wouldn't touch it here. Look for 645 to be next support. If we close down below 651. So 651, then 645. Daily chart. We rallied back yesterday. Dead cat bounce. We gave up support yet again. We're going to be, I think we go lower from here. So light volume today, I have to say that, but horrible price action. XOM, avoid. I wouldn't buy it here. Not right now. If oil pulls back, XOM is going to catch it. I like it longer term. I want to see a pullback on energy. What was the other one? TMO. Avoid. Outside reversal bar, monthly time frame. One trading day left to go. Not looking good. Weekly chart. We are flirting with a support level at 437.12. That's your support level to watch. We broke down below one support level this week. If we close down below 452.77, we're coming down to 437.12. With that, folks, thanks for joining in. Everybody have a great night, profitable trading day. And remember, in a correction or a bear market, today's lows may be tomorrow's highs. Think about it. Worry about the gap down. Tighten up your stops. Stay safe. Be well.